Hello, friends. Welcome to June and a beautiful, beautiful Colorado summer. Let's talk about May. May was a big month for the markets. The old adage, sell in May and go away, was not a good approach this year, as you would have missed all the action. So, what was the focus on? Mostly two items: tariff policy, number one, of course, and legislation. On the trade front, several key developments contributed to the optimism, including a 90-day tariff pause with China, the signing of a US-UK trade agreement, and progress on the negotiations with other partners, including Europe. However, reminding us of the uncertainty surrounding trade policy, on May 30th, Trump said that China had already violated the temporary truce. So that's not good. He also announced that effective June 4th, coming up, he was doubling the tariffs on steel and aluminum to 50%. That's raising the prospect of a spat forthcoming between the US and the European Union. We'll have to see. On the fiscal side, the narrow passage of the One Big Beautiful Bill in the House of Representatives increased the likelihood of the 2017 tax cuts being extended. That's good news. It also opened the door to potential additional tax relief on measures such as the SALT tax deduction, state and local tax deduction you've been hearing about, also the no tax on tips, we've heard about that, no tax on Social Security, that would affect a lot of you, and introduced incentives for business investment. All of that helped lift the markets as sentiment improved. The biggest risk tied to this momentum is the potential for larger budget deficits, obviously. This could lead to a temporary spike in interest rates, we'll be watching, and would create a headwind for equities, fixed income, and generally the economy. Adding to this month's momentum was a strong earnings season, with corporate profits clocking in at 14%, double the expected 7%. With mega cap stocks leading the way once again. I think I've seen this movie. The US stock markets are roughly flat for the year in 2025. After a whirlwind couple of months, the S&P ended May with 80% of stocks sitting above their 50-day moving average, something we watch. The best reading since the fall of 2024. For the domestic market, 62% now of the 2025 losses have been recovered. Let's turn to the economy briefly. CPI, the Consumer Price Index for April, as we mentioned, was lower than expected, bringing the year-over-year rate to 2.3%, the lowest reading since February 2021. While the report delivered a positive surprise, some retailers are actually signaling that price increases could be forthcoming, so we'll be watching that. April's employment numbers were stronger than expected too, showing no measurable impact from tariffs so far. The bottom line, markets often sway with the headlines. They're very reactive, especially with all the political noise, and that has been dominating the news cycle. However, history generally rewards patience more than trying to predict and time short-term market movements. We will continue to stay alert to tariff and inflation developments, everything going on, and we will keep you posted, absolutely. Thanks for your time today, and have a great evening. Take care.